Okay, everybody. Hi, my name is Robert Farrokhnia. I have the privilege of being your moderator today. As you may know, our bios should be in the app. I teach at Columbia Business and Engineering Schools. I also lead our Fintech initiative entitled Advanced Projects on Applied Research in Fintech at Columbia Business School. And that's the focus of our panel today at the conference. And before I begin, a note of gratitude to Tamer Center and all the good crew and all the student organizers who put this together, so appreciate it. Same thing goes to our panelists. Thank you for flying out here from all of us from San Francisco or coming from across town. Either way, we appreciate you being on the panel today, and hopefully we'll have a good interactive discussions. Just one note of housekeeping. I'll leave Q&A at the end, enough time. We'll have a microphone, so you can certainly walk up and ask any questions that you'd like in regard to the topic of how fintech could help or not help. We'll leave it up to discussion with all these notions of financial inclusion and reducing some of the inequalities we see across not just the US, across the world. Well, not just for the underbanked or non-bank, but also for most of us who may have access to financial products, but they may not be the most optimal products we would have access to. So with that, I'd like to ask each panelist, give us a quick intro, what you do, and a sentence or two about your organizations before we dive into the questions.
Sure thing. My name is David Derryck, Chief Impact Officer at EARN. We're a San Francisco-based nonprofit focused on solving really the $400 problem. So this is the fact that 40% of Americans don't have $400 in emergency savings. We essentially offer a digital platform combining content, gamification, behavioral science, and use those different types of tools to get people to start and develop a savings habit. Generally speaking, people come to us without much of a plan, little to no frequent savings, and after about 6 months we see people saving on average a little more than 50% of the time and reaching somewhere in the neighborhood of about $700. So glad to be here.
Hi there, my name is Jeff Kaiser. I'm the Chief Operating Officer at Propel. Propel is a Brooklyn-based technology company building financial tools for low-income American households. We got our start building a product called Fresh EBT. So Fresh EBT is basically a mobile banking app for anybody with an EBT card. The EBT card is the debit card that you get food stamps on. There are about 40 million people in this country who get food stamps, about 20 million EBT cards in circulation because those people are in households, and about 2 million of those people use our product every month to manage the balance on their card, make sure they have enough money left when they go shopping, set a budget, find places that accept the card, and various other ways to save money and find ways to earn income. Our mission is basically to build a suite of financial tools that provide affordable, accessible tools for our households using the EBT product as a distribution channel. So today, we have a balance checking app, and we're working on building a basic depository product that will let our users manage all of their household resources in one place. So one of the problems that we hear people talk about is their food stamps basically an important part of their household income, but treated as this totally separate category of things, not at all related to other resources that the household might have. And we're working on finding ways to help people integrate the way they think about all of their household resources.
Good afternoon, everyone. I'm Nicky Goulimis. I'm the co-founder and COO of Nova Credit. Nova Credit is a cross-border credit bureau, which in English means that we provide international credit reports to financial institutions, to property managers and others, so that they can serve immigrants to the US that they would otherwise be rejecting.
Thank you very much. So as I hope you see, this is a really exciting panel because you're attacking this question from multiple of angles. David, I'm going to start with you. So this $400 that you mentioned, there was actually a Fed Reserve report talking about this very issue. And in full disclaimer, David and I, EARN and the Fintech initiative, I should say, we are collaborating on a really interesting research effort in combining machine learning and psychometrics to devise nudges for better personal financial outcomes. And to us, it was perplexing that asking people to save $20 at the end of each month seemed for most of us a non-trivial matter, but for others, actually, it's very difficult to get it done. So, can you talk about from your perspective, some of the challenges in enabling us to get to that point? And why is it that from a consumer perspective, getting to that seemingly easily target of $20 a month is so difficult?
Sure. So I think one of the important things is thinking about fintech and the applications that it can be used for. Was in sort of Earn's prior life, we were a direct service type of organization, meaning we actually had people come into our office and would counsel folks to say, this is why you should save, you should create a budget, this is how much you should save, and start checking in on it. And it was also built over kind of a 2-year period under the IDA program. What we realized was, one, that wasn't scalable. 2, at the time, tools weren't around that we could actually utilize. So by taking, using fintech specifically, we use Plaid as an aggregator. It allowed us to do 2 things. It allowed us, 1, to start seeing individuals' transactions, and 2, allowed us to start actually creating specific nudges to people. So in the beginning of a month, somebody might come on and have not saved anything for the last 2 or 3 months. But at the end of the first month, they would get a notice from us saying, hey, you haven't saved yet this month. They're still 1 week away or 2 weeks away. Put in the $20. The interesting thing is, it's not so much for us the actual dollar amount. So we thought, could it be $100? You can kind of pick a number. But $20 is actually something that we felt most people would be able to achieve. And what we find is, over time, people make not only the $20, but slowly they start to actually increase the amounts. So the way in which we get to the $700 is that the habit starts to really be reinforced. So each time you get a nudge, each time we do a weekly digital scratch card. So each week that you save $5, you get something on your mobile phone, like literally a scratch card, and you could win $5. And 2 things we realized are starting to be debunked from our perspective. One is that the dollar amount is less important than the actual action, and the fact of winning something is not so much it's not the goal of winning, it's the goal of repeating that habit. So we see people start setting up different types of automations in their savings accounts and other types of things that way. So this is how we're starting to get to transactional data.
You brought up an interesting point, and that is, in most, if not all, applications that we build, there's always that gap between intention and action. One of the interesting things that mobile phones, and by extension how we apply that technology to financial services and fintech by definition, is how we can bridge that gap and get them closer to each other. So I appreciate you mentioning that the dollar amount is not as important. Once you get into the habit, you tend to continue this. Now, Jeff, interesting thing about what you do is the fact that you're using this seemingly old technology of cards, prepaid cards and so on, to enable a whole different sets of behaviors. And the fact that from a data analytics component also, using service such as Propel, you could also track certain data attributes, and you could hopefully use them for better purposes. So can you talk about that, the advantages of using something like a prepaid card, and advantages not just for, obviously, the merchant or the users, but for the society as a whole?
Yeah, sure. So one of the things that we found when we started working with people who have EBT cards and get food stamps is that people tend to spend their benefits pretty quickly. And so this is pretty normal human behavior. You look at how people spend their paychecks. It's not smoothed over the month, but it's treated as a windfall, and so people spend more when they've just been paid. This is true of low-income families as it is of basically anybody, and it's true of food stamps as well. So when people get a deposit, most people get it in the early part of the month, and for most households, those benefits last about 10 days. And so there is a period toward the end of the month where most households either are relying on food that they've bought or they're making do with less. And we saw this in our data as well. It's something that the USDA has published about. And we thought, is there a way that we can use our tool to help people at least be aware of how quickly they're spending their benefits and potentially try to change that behavior through some of the kind of nudges from the behavioral science world. So we worked with the Common Sense Lab, Dan Ariely's lab out of Duke, and ran a study where we basically showed people's monthly deposit as a recommended weekly amount instead of the monthly lump sum. So you'd see your whole balance on the screen, and then right below it you would see the recommended weekly budget, which was simply your monthly allotment divided by 4. And by making that number pretty prominent, the hypothesis was that people would anchor themselves on this concept of, how much should I spend each week, and try to, make their benefits last a little bit longer. And we found that was true. People got about 2 extra days of slack out of their benefits a month when they were in the treatment condition, and so we saw about a 20% increase in the amount of time that benefits lasted for those households, and so we rolled that feature out to all users, and we've seen a lot of success with it.
And I'll come back to, because you brought a couple of points in terms of just behavioral economics, simple things you could do to nudges that will lead to permanent behavior change for good, but also come back about tracking. Nicky, your Nova Credit does something interesting, and that is you're not just purely focusing on the traditional kind of audience for fintech companies, primarily people trying to solve a non-bank or underbank, but you cover the full gamut. It could be a rich investment banker from working in France coming to the US because their credit doesn't transfer, or it could be a migrant worker. Now, how do you look at the suite of products and services you would cover to such a wide gamut of audience through Nova Credit platform?
Yeah, and I wish I had a tidy answer to that. We're working on it. In many ways, the information asymmetry is most extreme when you have your was it a rich investment banker from Switzerland? Okay, so your investment banker from Switzerland.
From France, but
oh, from France. I apologize. So the French investment banker has a really profound information asymmetry. Really easy for us to solve that straight away, get them access to financial products. I'm not going to lie and say it's not harder with a lower income segment, and the reason for that is just, like all credit data, you're more likely to have data if you've had access to financial products in the past, and so it's much harder for us to serve that demographic. We want to serve all demographics. We're focused on immigrants as a whole, and so a lot of what we've worked on increasingly is like, how do we bring more alternative data onto our platform, not just bank transaction data, but things like cell phone data or actually like rental payment data, so that we can penetrate the full migrant segment here in the US. Ironically, in our space, for lenders, the absence of bad data is also a good signal to them, so that can also be useful. But I think I think ultimately we try and remain fairly product agnostic in terms of who we serve. So because we're B2B, we're driven by the partners that we work with. So we work with a lender who does high-end credit cards, and we also work with a lender who does unsecured personal loans for migrant workers. And so there is that extreme where we have to constantly be thinking about how do we work with different players and how do we broaden our data offering. But it's not easy, and I wouldn't say that we have cracked it. And certainly, one thing that we found in terms of different segments is just this trust element. If you're working with an applicant who's applying for a loan and they're undocumented and they're scared of different financial products, asking them to put in a bunch of information is not something that they're going to feel comfortable doing. And I think there's been a lot of these like duh moments that we've kind of learned the hard way.
That actually brings me to my next question, and that is, from a theoretical perspective, the availability and application and use of tech-driven tools, again, mobile phones and otherwise, and ability to sensors, ability to collect data, analyze data, cost of hosting and analytics is coming down every day. Theoretically, we could solve a lot of problems, but still, some major issues still remain. I mean, payday lending, we know that affects disproportionately low-income families, and we could find a way to solve it, and yet the problem still persists. So question to all of you, and starting with David, tell us from your perspective, and also taking into consideration we all are operating in a highly regulated industry, and we are not building chat messages. You could think about it overnight. I have to take many other things into consideration. What are the obstacles that you see when it comes to implementation of your solutions for your clients, and kind of a wish list? What would be the one wish that keeps you up at night saying, I wish this thing did exist or didn't exist, that could accelerate the adoption of technology to address financial inclusion challenges?
Yeah, that's a tough one. I mean, I think from the technology that is available is powerful, and I think the fact that it's relatively easy to get to. Most platforms are some sort of API that's out there. You just need to go in the sandbox and you can develop things very quickly. I think probably the biggest challenge that we face is two things. One, it's really understanding what information we're ingesting and actually trying to be transparent back to the user about how we're actually collecting it and using it. So I think those for us are probably an area of that is the most challenging, because you look around and we all can think about different components, but we're pulling in transactional data on a line-by-line basis from your checking or savings account. We also then think about ways in which we want to get demographic data to better serve our customers. So to understand, who you are, what's your household income, where you're from, size of your house, do you rent, do you own, all those pieces. And so I think for us it's trying to balance between what do we need operationally, what do we use to, as a nonprofit, what do we use for reporting and research components, and trying to make sure that we actually have the processes in place to sort of separate the two sides of the house, and also again to really be able to communicate to users that we think we're using it for good and we think we're using it to make your financial health better. But I think the biggest challenge for us is navigating that landscape, because I think it's far too easy to simply take in a lot of data and simply use it for whatever purposes you think are appropriate.
Jeff?
So I think I'm going to go way more deeply tactical in a way that hopefully is not too boring. But one of the big challenges we face is still affordability and access to hardware. And so our users are on just an incredibly long tail of like low-end Android devices, including all the way up to like super high-end iPhones. But basically trying to build a single mobile app experience across just an incredible diversity of operating systems and device types and screen sizes, and trying to build a consistent experience that is relevant to everybody and has a full feature set, and works when you are in low data conditions or you couldn't pay your cell phone bill and so you're only on Wi-Fi when you're in the library. There's just such an incredible diverse set of conditions that we're trying to accommodate. So it's hard to say a wish list, but I mean it'd be great to see a continued decrease in price of super high-end phones, because that for our users, they're they are what I think Pew calls smartphone-dependent internet users. So they're not kind of coming home and using a laptop or a tablet. They're primarily relying on their phone to apply for a job or access financial services, and so kind of the more powerful that device can be, the better.
Very interesting. Long gone are the days that all iPhones had one screen size, and most Android phones had 2 or 3 at top. So all you had to do is just develop one app for those 3 or 4 screen sizes, and you're good to go. And also the fact that I shared with one anecdote I found interesting, the difference to your point about most people actually using only the mobile phones for transactions. So I had someone senior from Bank of America in my class sharing the fact that now across all their customer segments in terms of age, vast majority interact with the banks purely through the mobile app, not the desktop app or web app or even visiting a branch. So I found interesting even for older generations. So Nicky, same question.
If I were president of Fintech for a day. I think what's interesting about all three of us as panelists is like all three of us are sort of approaching it as systems level change, I think, rather than truly being a single point solution. If I look at in our world, it'd be very simple to be a lender focused on a very specific migrant segment, offering a very specific product in a very specific area, and that could have enormous amounts of impact. But I think what's really exciting in fintech, and I think a lot of the change that needs to happen, is how do you make things work at a systems level? Because there are very large incumbents in this space. It's a massive and complex ecosystem. So how do you do something that can change the ecosystem more broadly? I think that's part of what we're doing. This, and it sounds very sexy in a business school to say, systems level change, and we're creating this technology that everyone's going to use. The reality of that is like, 2-year sales cycles on every side of your business, and like many, many years building different APIs and getting regulated and things like that. And so I think the inherent complexity is both where the opportunity lies, but also, frankly, the challenge. And then, similar, I'd love to make a very specific plug, which is consumer privacy, which is, I think in the US, like the last regulation that we've had on credit reporting is 40 years old. It was published in 1979. There's been a lot of conversation around what does that constitute, how does it evolve, particularly when you think about how to protect segments. So I think in 1979 they did a great job of thinking of protecting different ethnicities or gender and so forth from being discriminated against, but it is not right size for today's technology. And particularly, you mentioned technologies like Plaid. There's a lot of question around like consumers owning and managing their data GDPR in Europe also sort of like similarly enshrines that. That is a good thing, but there also needs to be some responsibility for the underlying data and some management of it. I think that's how you protect from some of the risks, and that just doesn't appear to be in place. And so if I think about, in my very boring and specific world of credit reporting, I think you need to combine elements of empowering consumers with the responsibilities of holding, managing data, resolving disputes, and so forth, so that that empowerment is something that can be actioned, rather than just expecting consumers to understand what they're doing. No problem, here we go.
One of the reasons I'm excited to be on panels such as this is to interact with the likes of you. Yes, financial services, highly complex industry, but the incumbents have no incentive to change unless there are entrepreneurs and those who want to change the world knocking on their door trying to disrupt them. So that's why I always appreciate all the things that you all do, and I try to do the same. And now, in terms of not just US focused, but domestic, innovation in financial services in developing countries used to be a bunch of executives from a bank or financial institutions in any other country coming to the US, observing what we do, go back, copy, and they would call it innovation. Nowadays, it doesn't work like that. In fact, we could learn lots of interesting lessons from countries other than the US or Western Europe. Because especially if you're kind of relating it to the world of mobile phones, the fact that certain countries didn't even have landlines, but they were able to leapfrog, jump directly to mobile phones, and now people in Africa are doing things with their phone in terms of interacting with financial services companies that even in the US you can't dream about. So I'd be interested in kind of sharing, all of you sharing your thoughts as you interact with other startups in other parts of the world and learning about different habits. What are the things we can learn, copy, or not copy in terms of best practices that would aid all of you in your missions? David?
I keep getting the first answers.
Well, I'm going in order. So.
I think for us, probably what we've tended to look at is so a little bit different. Our app is actually a web-based app. So we made a conscious decision. We kind of continually look, should we develop a mobile app or should we keep it web-based? Partly it is, I think, to Jeff's point in terms of the types of how long the tail has become and types of phones that are out there. I think internationally what we've looked at has been typically trying to understand how are other companies or how are other countries. We've looked at UK and somewhat in kind of the Kenya region in Africa about text-based banking, and so what else can you actually do in terms of being able to either move funds or to do your actual banking routines through text-based initiatives. So I think for us that's been an area where we're excited to explore. And then the other side of it has been trying to understand how people use WhatsApp. So here in the U.S. we always think about messaging, and it's typically either your default iPhone, Android platform, where the rest of the world looks at WhatsApp and thinks about it in an entirely different method. So we're trying to really understand how do people use those types of applications, primarily around finance first, but secondly, just in terms of how you communicate. So one of the areas we're running a test right now in terms of how can group dynamics influence savings. And so some of the things we look to do is can we create text savings groups or other types of communication closed loop communities that will actually influence your savings and behavior. So we tend to look at those types of things internationally.
That group dynamics plays a big role, not just in savings. There are lots of interesting case studies in emerging countries in regard to kind of using social peer pressure as a way to get you to pay back your loans to the group, or save more money and so on. Jeff?
So for us, as we've started to look at the kind of neobank world and the depository product world, you can look to the UK for kind of the best examples of the successful neobanks, and to Europe and Germany and elsewhere. So the one that I think has maybe been most inspiring for us has been Monzo and the way they deal with community. And they basically, like, the community of Monzo cardholders and people who have Monzo accounts is like a core feature. So a core part of their app and their experience is people sharing with each other how they use the service, what features they want to see from the product, the way the company interacts with their users when they do something wrong, when they make a change internally to the org structure that you'd think otherwise wouldn't matter. The other day they basically tore down their whole team that does their kind of premium option. So they have like a flat monthly fee option, and they came out to their customers and said, this wasn't working. We basically, I don't think they fired people, but we kind of took down the whole team that was running this premium model, and this is the new team, and here's why they're great, and why they're going to build you a great product. And I don't think we've ever seen companies in the US being as transparent with why they're building the things that they're building or how they're building them. So that's been kind of cool to watch in the way that they've been as transparent with their customers.
Great. Nicky?
Sure. So our business has this ironic dynamic where we sort of had to build international in order to be able to build the US, because we are a cross-border credit bureau, so that means we have to go and integrate with a credit bureau in Mexico and integrate with a credit bureau in Korea and Brazil and the UK and Nigeria, name the country. We've either integrated or are in the process of trying to integrate with them. And so that was a lot of like doing the international side before you can even start to work in this original market, which was kind of the other way around than it is for most companies who get to dominate one market and then go internationally. So we get exposed to a lot of that. We recently did our third integration into the Chinese system, which has been fascinating in terms of what's happening in that market and how fintech is used. So I don't know that I have much to add, and of course we like cross-pollinate learnings with the fintech companies that we interact with. We often ask a lot for their advice around how do these systems work and what can we learn from on the technology side. That said, maybe a slightly different angle is that I believe the cross-border part still has like way too much friction. So yes, there's like a ton of learnings that you can get from different countries. There's a ton of like amazing new technologies in fintech. But the fact is that for one financial system to connect to another is incredibly painful. Like remittances, still really painful, expensive. How do you actually validate that there's not anti-money laundering? Even just think about the financial system. Like we live in an increasingly global world. I can borrow a loan right here today. I'll get a 4% rate, and I can like drive into Mexico and I will get a 12% rate and I will be the exact same person. And there's no reason for that. And so, I think there's amazing things happening in fintech, and certainly the focus is going outside of the US. But I don't know that amazing things have happened at a truly global level yet.
All right, well, since I have you all on the panel, and that means by all of us by definition, and probably everyone in this room, we are optimistic about the role of financial technology and fintech.
I was too pessimistic, sorry.
That's okay. I want to do a reality check on this topic. We are passionate, and we are here, and we are all trying to tackle this big problem from different angles. And I would not be lying to you that there are times in which you kind of feel defeated and like, oh, the world is too complicated. The incumbents are too powerful. The regulators are too slow to innovate. The financial markets are not cooperative. So let's do a reality check and figure out, especially for younger members of the audience who are in school, also passionate about this and kind of foreseeing a career in this area. What are the lessons we can impart onto them, and what are the lessons we can impart onto whether you're an investor or a consultant in this world, to be able to shed light on hidden corners that only you see from your perspective that would be beneficial for all of us to learn. I'm going to start with Jeff this time. So.
Maybe it sounds trite, but like opportunity is everywhere. You should look in places where other people aren't looking, and where things that are non-obvious or where there's excitement. And so for us, that was in a banking customer that nobody else wants to serve. And again, I guess we have a lot to prove to demonstrate that could be viable. But there are products out there that are being built for customers who, not all that long ago, were kind of had their door shut in their face. So I think kind of with the lower cost access to services and the democratized access to actually being able to build products, as there's more kind of core banking infrastructure available to developers, there's easier ways of actually building tools quickly, so you can do it for lower cost. You don't need physical infrastructure, which means that you can serve a customer for cheaper, which I think means you can make more affordable services available to anyone. And I think that should just be, you should just look everywhere for that type of opportunity, whether it's in the insurance space or, there's I think just kind of countless places where we haven't even seen the beginning of what the innovations that we're seeing in kind of the core banking world could apply.
Nicky?
I kind of want to reiterate Jeff's point, which is, I think there's this really exciting unbundling happening right now where there are, you have the layer of services that any fintech or company can use and create banking overnight have never been as powerful or as available as they are today, which means that the vertical opportunities of serving like a very specific segment really well are so powerful. And so I think it's kind of like the age of user empathy in some ways in fintech, where you can really go deep and serve people well. And I think the two panelists I'm sat with here today like do an amazing job of that, and that's really compelling to me, and I think says that in a country where today there are 50 million people who are unbanked, that should very quickly become a problem of the past.
Yeah, I think the same thing about the technology platforms. I would say from having been a business school student here, the opportunities I think that are still overlooked are really understanding what the regulatory and kind of the frameworks are, because I think what we find is it is extremely easy to build these products, but we're going through a place of trying to still get account openings for sort of traditional banks. And so for us, when I first started, I thought it was going to be development was going to be the challenge, and that the compliance and getting through that was the easy part. It's actually the reverse. And I think as we look around the world, developers, the ability to actually build products is getting far easier every day. But the same regulatory compliance exists, and so the time frame still seems to be extended because of the existing regulatory environment versus the actual capabilities. The second area I think that there's some opportunity to really rethink is the notion of a checking and a savings account. I think the fintech space is still really defined around this whole notion of we should have a checking account or a savings account. But the reality is for us, we have about I'd say about 40% of people come to our platform with no traditional bank account, but they have a PayPal account linked. Their PayPal account is linked to Venmo. It's linked to to some other type of payment process. And I think there's a big opportunity to really rethink how money moves and how you actually think about what an account means today versus what it will mean in the future.
Well, let me ask two related questions. I'm going to throw the first one to Jeff. Everyone in financial services, most of entrepreneurs I meet, they're all excited about building a fintech, solution, whatever that may be, and they all have come with this very altruistic, good social impact notion. I'm going to go after the poorest clients, or whether I want to solve problems for them. But they invariably, not all of them, but some of them revert back to trying to cater to the richest segment because that's where the money is. So do you think realistically a fintech company can be for profit and cater to the needs of low income, underbanked or non-banked in general and still be profitable, build a profitable business without having to rely on fees or the traditional tools that banks have used in the past to provide services to them?
I sure hope so. Otherwise, I should probably leave my job. I think for us, it's sort of deeply rooted in our ethos and in our core values that we are serving who we serve today, and that's not going to change overnight. I think we will have to be more creative. We've seen that already with just trying to monetize Fresh EBT, with what started out as a traditional advertising business, and now we work with clients that I think we never thought we would work with, but who are actually offering ways for our users to save money or find a job, and trying to find those same creative partnership opportunities or kind of creative revenue streams that may not be how banks have traditionally monetized would be kind of the only way I think that we'll survive. And I think the other thing for us is like our distribution channel is part of our core advantage, right? If we can acquire a customer for effectively nothing because they're already on our platform, that means we don't have to make as much money back from them to break even on the acquisition cost. So we can hopefully be more creative with what we offer to those customers later on.
And second point, Nikki, I would like you to address this, and that is, it is true that the cost of doing business has gone down dramatically. The fact that all of us have a computer in our pockets that has GPS capability and a camera and powerful processor is a good thing, and that enables a lot of fintech companies to pretty much create a branch in your pocket. So from a competition perspective, yes, you can have a lot of competition, but at the end of the day, it boils down to talent. What kind of good developers and designers and biz dev people you can attract. Your company, you have the added kind of challenge of being cross-border. So you have to take into account different habits of different ways of interacting with different services. So what do you do when it comes to attracting the best talent that makes you optimistic about fintech and addressing financial inclusion challenges?
Yeah, as
Most developers just want to work for Goldman Sachs, or?
well, 70% of our team is first or second generation immigrants, so we've found our niche very well. No, I mean, I think tech is really exciting, and so I think there's a lot of. I actually think that's a problem that the incumbents have rather than the startups, because I think the startups are attracting a lot of the amazing talent, and so the incumbents are like trying to spin up fun projects to attract the talent, but those projects don't necessarily go anywhere. So I'd say that's a massive asymmetry in the market, and I'd actually argue that you probably want some great talent at the incumbents as well, and certainly some of our best customers have really great talent, and that's differentiated them in that space. I don't think I answered your question there.
You kind of confirmed my own bias, which I appreciate, and that is I'm delighted to see both on the business school, but also on the engineering school. Most of my students are not what I call mercenaries anymore, meaning they're just going to go after the job that pays the most. They actually care about impact. They care about mission. They care about what they do and what that job will do for many others. So that has been a good way of making sure that not all top talent goes to incumbents or the big boring banks, but actually exciting startups. David, I skipped you because I have a separate question for you, and that's in regard to Earn. So Earn has been around for a long time, close to 2 decades. I'd be interested from your perspective, the evolution of how we interact, or your customers interact with the core mission of Earn, helping them save money in general, and in particular before the advent, 2008, before the advent of iPhone and smartphones, and after. What was the kind of a change that you saw as truly notable?
Yeah, I think for Earn, again, as I said, part of it was direct consumers. So from a scale perspective, Earn started about 20 years ago. First 12 to 14 years served about 6,000 people, so had about 6,000 customers over that time frame. Really, our big pivot was about 3 years ago when we launched a digital platform. Since then, we have now about 200,000 members. And so I think the shift that we had to make was, one, you can't do sort of one-to-one types of work because it just doesn't scale. And 2 was then starting to really bring in technology. So I think for us, the shift has also been from a staffing standpoint, moving really from direct service, kind of traditional nonprofit staffing, to now we have a team of developers, product managers, QA folks. We're a different organization. And I think the other piece, though, is that we're starting to also think about how do we design more rapidly. So for us, we call ourselves now a nonprofit fintech, and we sort of sit in a little bit of a weird bubble because we're nonprofit as a mission-driven organization, but when people say, well, who are your competitors, who else looks like you, we tend to think of groups like Digit or Capital or other types of fintech platforms. So I'd say those have been the primary biggest change, has been how we interact with our customer. We don't know them anymore. Obviously, we can't know each of them, but we still try to reach out and use design principles, and we survey and bring them in to make decisions about product changes all the time. So that, I think, has probably been the biggest shift.
And that brings me to my last point, which I forgot to mention when I talked about ease of doing business, the cost of business having come down. Also for startups, it's much, much easier for us because there are more tools in terms of iterating an idea and coming up with an idea and building a prototype that looks and acts as if it's a real thing without doing much coding on the background, do lean user research to validate or not, and move on to the next thing. All these conversations around design thinking and sprint, idea to prototype in 5 days, which is an interesting book. You should read it. My program is mentioned in it, so it's an awesome book. And all those tools enable us to, hopefully figure out the best way to address these questions around financial inclusion and underbanked and non-banked and so on. I'd like to open up the remaining time we have to the audience member for questions. So we have a wireless microphone set up in the middle, so feel free to come up, introduce yourselves quickly, and let us know of your question. A Sprint, Idea to Prototype in 5 Days, is a book written by good friends at Google Ventures and the Google Design Studio. We actually launched the book at Columbia, so I can assure you it's a good book. I don't get any royalty from it, so just to be clear. Please.
Good afternoon, guys. Thank you very much for your time. This question is specifically for Jeff and David. you guys, from what I understand about your businesses or your products, you aggregate a lot of information from what people are purchasing. Is that correct? You get in a lot of. Is there a place where people can buy in bulk together or to save money? And have you thought about that, or has that been something that you've looked to doing? And then my second point is for Nicky. Have you heard of a company called First Access? You've heard of, okay, all right, because I know Nicole Vanderteen from there. So, okay,
Yeah.
all right, yeah,
No, terrific.
yeah, they are terrific. They are. And just for everybody else's, First Access uses cell phone data in Africa to get people's credit scores.
Thank you.
David,
do you want to start first?
Sure. So we do collect. We would not develop something like that on our own, but we oftentimes do look to try and partner where we can add value. So I think I think a good example of how we would approach is we actually work with Propel. So Propel sends fresh EBT members to our site because it provides an opportunity for people to start saving. And so we would look for ourselves to try and partner if there was an organization that had sort of the same mission fit that said, hey, we can offer this kind of service to your users. We would then explore partnering with them in that sense.
We've thought about this. I mean, logistically, it's really hard. The fact that Amazon's going to start taking EBT payments for online groceries is about as close as I think we'll get in the near term.
Please.
Hi, I'm Betty Tran. I'm with KIPP Philadelphia Public Schools, a charter school network in Philadelphia. So I have two questions. One is about EARN. I was wondering if that was related to or inspired by the government's EARN Employment and Retention Network program, which is the workforce development program, if that's linked at all. And my question is open-ended to all of you about so I've come from the workforce development field, so I'm wondering what sort of best practices or interactions you may have had with employers to get them on board with your technologies, because I imagine that since they're the ones putting hopefully more money into the pockets of a lot of these individuals, if you've been able to influence their behaviors, whether it's what they're paying in wages to their workers or benefits they may decide to provide after they realize what great need their workers are having. If you could speak a bit about those.
Thank you.
We're not related to EARN. So EARN was an acronym that was started about 20 years ago. But from a
So complicated, even you don't remember. I was trying
way
to
before
remember.
me. Yeah, actually, Earned Asset Resource Network. But we are starting to work with employers. What we find, though, is I think Nicky's point about longer sales cycles and how long it takes people to actually sign up for something that we think is pretty straightforward. I think there's just challenges with employers, but there is at least a movement with people thinking about financial health and financial wellness, and it's at least raising to the top of kind of the benefits world. So people are talking about it. I think it's more challenging from the benefits side, because then they start getting quickly into, well, is it taxable? Do I have to offer it to all employees at all wage levels, and a series of other questions. But I think we will see a trend and increasing utilization of these types of platforms by employers.
But you're onto something. Truly, the check processing companies they could really change and have a huge impact on the society if they just get their act together by just paying people at the end of every day, as opposed to wait for 2 weeks. Why 2 weeks? Well, that's quite in the employer's benefit, not the employee's benefit. Thousands of years ago, we used to pay people at the end of their working day. If you don't believe me, you can read the Bible, is there. So all these issues around payday lending and budgeting, I think, could be addressed to a large extent if we could just change behavior around how employees pay. But it's a huge obstacle to overcome yet.
The behavioral scientists would potentially disagree with that.
Yes, I know why they would, but still, I'd rather get them their money as opposed to them getting it from payday lender. Thank you.
Hello, Dave, Jeff, and Nicky. Thank you. Excellent discussion.
I feel left out.
Well, you're the host, so it's important to celebrate them and compliment them.
Thank you.
And it's wonderful listening to you guys. So I manage a CDFI that provides access to credit for immigrant and refugee businesses. We also work very closely with Credit Builders Alliance. I know you work with Dara Duguay. I used to be
Correct.
on her board. So my question to you is, you guys are incredible and, you're inspiring everyone who's here, all the students at Columbia University. But when you think about fintech, for us, we get PTSD because we have so many business owners coming in who have loans with on-deck capital, cabbage. We have some clients who took a loan for $50,000 and they ended up paying $90,000. They weren't aware of what they were signing up for. So Dave, I'm sure you probably encounter families that have made this mistake. So what do you think? I mean, what do you think is a solution for this bad behavior?
I'm going to defer this one to you because
Sure.
I think it's a credit question.
Yeah, I mean, I actually think, is this being recorded?
Yes.
Okay, so so I think small business lending in particular is a place that has what I would consider punitive and offensive interest rates, and I think it's not just the rates themselves, but it's also, frankly, the transparency in how they're dispensed. Obviously, I think we can also all understand the credit equation, which is, in order to be able to lend someone money, the rate is often reflective of the risk, but there are questions around whether or not you should be able to lend in that space. And I think unlike consumer lending, where there has been a lot of regulatory attention, there still hasn't been much attention on the small business lending side. And there have been a number of initiatives to bring together different parties in the space to develop certain principles. Yeah. But that feels like a regulatory gap, frankly. And I would agree that
I
it's
would on
problematic.
top of it, the notion of financial education. There was an interesting research, I don't recall exact dates or I don't remember exactly, but this was done after the financial crisis. And the researchers asked some very simple questions, math questions, from the participants. And they kind of looked at how many of those actually taken out all these bad loans, ninja loans, like no income, no job, mortgages that eventually collapsed, led to a lot of people losing their homes. And it turned out just being able to do some simple math had a high correlation with failures or success in terms of understanding what people are signing up for. Jeff, you talked about this simple exercise of just dividing a budget into 4 weeks as opposed to just show it per month. Again, you'll be shocked that there is a certain percent of population who's not able to do that or understand the impact. So I think as a kind of a broader community, addressing the financial education, and regrettably the complexity of it has gotten to a point that's not easy to do, but we can, that's I think would go a long way in addressing some of these fundamental problems. But I'm glad you asked the question because we've been kind of focusing on the consumer side, but small businesses also are consumers of fintech.
I think you might be. I think my perspective is that I think you're asking too much of the customer, and that the onus should be on the lender to be.
Exactly. I didn't mean the customer should know. It
Okay.
shouldn't be just them, but it should be them not giving you a mortgage application that's 60 pages long.
And you should see
written
this is
by
the
a
cost
lawyer.
of the loan. This is how much you're
Yeah.
going to end up paying at the end of the day.
That's what we're trying to, there's a coalition of us, and we're trying to have some regulation for it, where the information needs to be presented in a certain way.
We've succeeded in doing that in California.
Yes, exactly. So we're working with a team
Yeah, this is a question for you, actually.
from California who are inspiring people in New York. So thank you.
Ideally, it should be done at the federal level, but California typically leads the nation, so. And you have the good weather, maybe that helps. Please.
Hi, RA. Thanks for moderating the panel and panelists. Thank you all for
Thank
being
you.
here.
You see, that's what I love doing this.
So,
Please make sure this gentleman gets a prize for the best question asked.
my name is Tribuna, and I'm currently in a managed care space. I manage analytics for Horizon Blue Cross Blue Shield. And to your point, Jeff, we actually face the same issue when it comes to creating apps that serve a lot of our Medicaid population, because they do use phones that aren't in line with capabilities that we have now. So I feel you on that. So really, my question is around like this kind of taking a comprehensive approach to reducing inequality through fintech. And I say that to say a lot of what I know as far as inequality, goes beyond just the conventional approaches to helping people save, right? It's like taking that person who's learning how to save to that next level of investing. And a lot of the fintech opportunities, apps I say, are self-identifying. For example, I may never use Earn, right? Because maybe I have knowledge around how to save, but that person may never also get to an ACON because they don't understand that they're not educated to that next level of, okay, let me now invest, right? So comprehensively, are there thoughts around how do we create this kind of one product, right? Because a lot of it is separate. And we face the same thing in healthcare. How do we get, all providers to see what a particular member just experienced across the spectrum of providers so their outcome could be better? Same thing in terms of inequality. How do we get, the lower spectrum of, those on the lower side to kind of level up through this one app that serves multiple needs to get past that level that they're at, if that makes sense.
Do you want me to direct a question to you, David?
No. So on one hand, our perspective has always been you should solve one problem for people really well, and that's the best way to get somebody to use a product. And I think to Nicky's point earlier, like the unbundling of banking is, I think, why a lot of these products are succeeding, is because they're appealing to a very particular individual pain point. And then we're starting to already see the kind of rebundling where somebody has your checking account and now they're offering you some sort of overdraft product or a savings product. And so, once you have brand loyalty, then it's easy to start bringing things back. And all of a sudden we have institutions that are starting to look a lot like banks again. So I think we'll get there, and a lot of it probably has to do with brand loyalty. And so finding the acquisition hook that brings somebody into your first product and build a deeply trusting relationship with them, and then hopefully that company or that brand or that product is offering the types of things that are good for that person, so that maybe it is an opportunity to invest. I think we're seeing this with a lot of the neobanks offering moderately high interest rates on a checking account. So you can earn 2% in a basic checking account now, and it's not like people are making a lot of money from that, but they're kind of training you on the model that if there's money sitting in your account, you're going to make more money, and that's hopefully beneficial in some ways.
Yeah, I would say just maybe an example of an institution trying to go that way is PayPal and sort of their constellation of acquisitions over the past few years. So the specific question about you could open they have a money card account, which is, you're not going to earn any interest, but there are also no fees. And truly it is one where you can have an actual unbanked product, because you can go and put cash into it. It doesn't need to be linked to sort of the existing infrastructure that's there. And through their investment into Acorns, there's a belief where you can take your PayPal deposits, move it into Acorns. I think there's still going to be, for a while, though, a question of how much do these products cost, what are the fees, and all those types of things associated with it. But I think they're a fairly interesting company to take a look at in terms of the acquisitions they've done, whether it be for remittances or other types of bill pay and other kinds of things that are at least an initial and maybe early day blueprint for sort of the one-stop shop.
Taking into account the challenges around regulation, if you're a startup, let's say you want to add a new product, say insurance, the way regulatory framework for insurance works in this country is that you have to go to every 50 states and get permission. For a startup, that's obviously cost prohibitive. Yeah. But I appreciate your questions in regard to healthcare, especially because apparently the way our brain is wired, we are very good at anticipating needs or pleasure that's upcoming, as opposed to predicting for 20, 30 years. So healthcare and financial services have a bunch of points of commonality. Aside from highly regulated, the fact that we have to train people to do things that they may not reap the benefits 20, 30 years down the line. So how do you address that? It's an interesting challenge to tackle. Please.
Hi, worked in Fintech for 20 years and left it because I found there was a lack of values and there was a focus on exclusively the bottom line and not the triple bottom line. So I'm curious, how we can support organizations like yours that are trying to create positive change, and if you have any thoughts or inspiration about creating what I believe is a systemic shift that's needed in the values that are driving growth in a lot of financial organizations. So I'm just curious if you might reflect on that, to what extent values and vision helped drive your organizations, or what are you think the things that we need to do to help shift the priorities of many who work in the financial industry so that organizations like yours can create the changes that we need.
Should we ask Elizabeth Warren?
I think when I was in business school, all of the like values case studies would be really binary. It would be like a very clear decision point. And actually, I think the startup journey has so many micro decisions every day that tie back to values. How are you going to compensate this specific person? Oh, this person negotiated, this person didn't negotiate. Should they have different compensation? And there's so many like different elements where I think values questions come into play. So I think it's so pervasive that I think it's frightening, frankly, how much like power entrepreneurs or anyone in a company truly can have in making these decisions. So I don't know. It's exciting to me. I think that schools are making more investment in reinforcing. How do you think about difficult decisions? How do you make the right decision? And then, yeah, I mean, there's certainly a point around intentionality. We've tried to be really intentional with our values and to uphold them. I
would have just been an advocate for the companies, on the board, because they really, this is my due diligence. You're doing things the right way, and they really care about not just the customers and the core mission, but also the double or triple bottom line that you mentioned. And don't forget, you can always contribute to Columbia Business School. Tamer.
Well, I do. I mean, I do. I'm a mentor team where I work with
Fantastic.
Columbia entrepreneurs. So I'm just wondering if there's like a fund or some other ways that we can, help people directly. Because I'm wondering if what you need primarily is money.
No, I think it more goes to what you spoke about in terms of students not necessarily being solely profit driven in thinking about jobs, and I think that actually has to do with like changing how people think about capitalism, and that capitalism is not just like this monolithic thing, and that there are other things that can live alongside of it, and that it's okay to make decisions that aren't purely about how do you maximize the amount of money that's coming into your household. And so for us, that means when you're thinking about hiring and making hiring decisions, like trying to really screen for values, which is so hard to do. It's like definitely the hardest part of our hiring process is how do you actually screen for mission alignment and values, and it's something that we definitely don't have right today, and we are like, after every single interview process, we're kind of like, okay, what can we try next time? What can we do better? Because it's just really hard to get it right.
Excellent. Last question. Thank you.
Yeah, last question. We're a few minutes to 3 p.m., so I try to be quick. So I come from Massachusetts, and one issue that we focus on is the technology that people can actually obtain. So if you drive maybe 1 hour outside Boston, you'll find out like you don't have any cellular connections, so you don't have access to internet, and that's a major issue. So I'm just out of curiosity, when you're promoting your product, do you often find that, or sometimes if you find people that you want to serve but they don't actually have the technology to actually gain the benefits, do you find that issue common? And if you do, what do you usually do on a marketing or a promotional standpoint to get your message across?
We just rolled out in store today with a large telco provider. So that's just been a really crazy learning curve around how do you make a retail experience work. And for all that, there is this narrative that the branch is going away. I don't think it's ever going to really truly go away, and there's a lot of value to it.
Yeah, I think for us it's probably just around marketing and awareness, and recognizing that somebody can get online at some point in general, but we're doing a couple of tests, one in Bluefield, West Virginia, and Johnstown, Pennsylvania. So one is a community of about 7,000 people, the others I think about 15,000, and half don't have digital banking, so they go to the branch. And so I think it's a real challenge of just recognizing that a digital product still has to live in the real world, that it's not just in front of a screen. And if you want to get your message out, you have to just think creatively, whether it's print, radio, sponsorship. We're sponsoring a minor league hockey stadium because we see that that's the communal point. So I think it's just figuring out those types of things as well.
One thought from me is, for us it has to do with like product development, and again, like making sure that you build a product that actually works for people who might have those constraints. And so if that means like preserving an offline experience, if you know that when you're actually in the grocery store you might not have cell service, so that you don't end up on a blank screen when you open the app, or just thinking about like how do you build a product that's accessible and works in all sorts of different settings.
Excellent. With that, I'll thank you all for your participation and great questions, and our panelists, thank you so much for being here.